Thursday, December 5th, 2019, MONERO 64, home of alternative economics and contrarian views. This morning, I want to reference a great book I've been sent the link for by actually one of the viewers who sent me a very generous donation through PayPal. And in this book, the author talks about why gold has been the most stable money, why it's been the money for millennia. And I've spoken about this before, but in this book, the author explains very well why it is. And he also talks about why platinum, for example, which is a precious metals, isn't money. Some of you have asked me that question. And Philip Barton, the name of the author, he wrote this book about 4 years ago. It's called Dawn of Gold, The Real Story of Money, right? And I'm going to go through that. Today, though, before I go into that, I'll quickly look at the markets, switch things around a little bit. Yesterday, of course, I made my video early on when I was uploading my video. The news, this headline came out about the trade negotiations improving, right? No source, right? And the markets just zoomed up. I think the stock market was up over 200 points at one point. Gold came off. It was trading above 1480. Went low as 1471, right? Silver was smashed. The Chinese later on said they didn't really see much in that comment. It didn't really make any sense to them. And in spite of that, the market stayed quite elevated. Looks like someone wanted to try to keep the markets from continuing to go lower. We had drops of 1% both days in the Dow. The charts weren't looking good, right? So the stock market finished up 147 points. The Dow about almost 100 points off its highs, though. So it did come off at the end of the day. It finished up 0.5%. It had lost 1% both on Monday and Tuesday, of course. So this morning, as I speak here from London, it's 7:45 a.m. We've got gold actually pretty much where we were prior to yesterday, around 1476. We are at 1475, up just under $1. Range has been 1473 to 1478. Silver is up 4 cents at 1688. Our range has been 1682 to 1695. The Dow future is up 40 right now, up 0.15% at 27,694. S&P is up 3.5, 31.15, and the Nasdaq 100 future is up 15 at 83.08. It looks like for now things have calmed down for the stock market. We'll have to see. The next big hurdle or next big news is tomorrow, the U.S. non-farm payroll number. I know a lot of you don't think much of that number, but the market does look at that number, right? The jobs data. Currencies, sterling has continued to rally quite a bit. Market seems to think that the Conservative Party is going to win and everything is going to be great, right? So I'm not sure. This seems to be a little bit of buy the rumor, right? Sell the fact maybe next week on the 12th or the day after the general election. I did notice, though, that one of the big mutual funds in the UK, M&G, closed one of its funds, a £2.5 billion fund, property investing fund. And why do they do that? Well, because they said a lot of people were trying to liquidate their holdings and they couldn't sell the properties quickly enough, right? That's the problem with these property funds or any other fund. This is not the first time this has happened. It happened, I think, in 2016. A lot of funds had to freeze their wouldn't let their clients take the money out. Is this another Woodford? We'll have to see. Euros at 110.82, up slightly. Dollars at 108.80 against the yen. That's unchanged. And the dollar is down 0.1% against the yuan at 704.40. Oil still fairly firm. WTI is at 58.24 and Brent 62.75. They are down about a quarter overnight. Bond market. 10-year yield is actually down just over 1 basis point at 177. So fairly quiet, the bond markets. So let's go and look at Philip Barton, Dawn of Gold, The Real Story of Money. I started reading this book yesterday. I haven't finished it, but I think what he talks about in chapter 3 is really interesting. I've spoken about this before. Don't remember when. For the new viewers or even old viewers, maybe they don't remember. This is a refresher. It gives you a really good explanation why gold has been money for so long. And I highly recommend you read the book. I'll put the PDF link below in the description. It's the kind of book, if you're into money, into gold, that you should read very easily. So here's chapter 3, the stock to flow ratio. So I'll go through the chapter here. He puts a little quote from Tolstoy in the beginning. It says, "Truth, like gold, is to be obtained not by its growth, but by washing away from it all that is not gold," right? Interesting comment by Leo Nikolaevich Tolstoy. So let's go and go through his explanation. Philip Barton. I think he was born here in England, North London. Well, a bit further, just north of London. I'm more the other direction, of course. And I think he's lived throughout the world. I think he's in Australia now. But this is what he says. If it is true that stability of value is the crux of monetary matters, then an understanding of the stock to flow ratio is of supreme importance. Before I go further, have you noticed how central bankers always talk about price stability, right? They're competing. Their paper currencies are competing against the money of Millennia, right? That has been the most stable money. That's why they don't like gold, I would point out. If nothing else is gained other than a thorough grasp of this, then the reader will be ahead of most in the gold community and way ahead of the vast majority of economists. No valid understanding of gold can be attained without it. The stock to flow ratio is the uncomplicated technical entry point into the subject. So let me just have a sip of my coffee. So let's keep going. Gold has been used to store wealth for thousands of years. Only a small percentage of gold has ever been used by industry, and much of that is recycled. What this means is that the vast majority of all the gold ever mined is still available for use. Around 174,000 tons is quoted as being the total amount of gold available in the world. This figure is known as the stock of gold, right? This was written in 2015, so it might be more now, but you will see that it actually doesn't matter. And I know that Bix Weir thinks there's millions of tons of gold under the Grand Canyon, but until we see that gold, I'm gonna stay with the official figures. Each year, about 2,700 tons of gold is mined. This is known as the flow, right? It is from these two amounts that the ratio is derived. When the stock is divided by the flow, so 174,000 tons divided by 2,700, it produces a stock to flow ratio of 64:1. The stock to flow ratio is a way of stating the total amount of above ground stock relative to the amount that is being produced by the mines each year. It is no more complicated than that. What this ratio lacks in complication, it makes up for in importance. The point to hang on to this is that the stock of gold is far, far greater than the amount of new gold arriving in the market each year. This leads to a situation where the value of gold is very stable. There you go, the stability of value. The larger the gold stock becomes, the less influenced it is by the flow of gold from the mines. Having been accumulated for at least 6,000 years, the amount of stock is now so great that gold's value is uninfluenced by variations in the amount entering the market from the mines each year. It is this huge amount of stock that gives gold its stability of value. No other, this is the important part, no other commodity has anywhere near this stock to flow ratio. What this means is that nothing else has gold's stability of value. Most other commodities have a minuscule stock to flow ratio. Their stock is less than the yearly flow. Almost as fast as they are mined, they're used. World stocks of ordinary commodities are rarely sufficient to last more than a few months. Yeah, there are commodities that are consumed, like wheat, like oil, right? Like rice, anything that you consume, even silver to some extent. So he goes on, when there is only a small stock of a commodity compared to flow, then its value can fluctuate enormously. A new large mine would increase the flow and result in a fall in the value of the commodity. A sudden closing of a large mine would increase the value. Volatility in supply would cause instability in the market value of any commodity with a small above ground stock. Because of its high stock to flow ratio, gold holds its value with a stability that is matched by nothing else. Well, not even paper money as well, of course, apart from commodities, and can be matched by nothing else. So you can understand why central bankers hate gold, right? The stock of gold is equivalent to 64 years worth of flow. The stock of most other commodities would be depleted in 64 days after mining ceased. So that's how important this stock to flow ratio is, right? If gold were just a normal commodity, its value would tumble with 174,000 tons already in existence. It is the constancy of the demand for gold's stability of value that ensures that the stock grows ever larger, and because of that, the value ever more stable. They are mutually reinforcing phenomena. It is gold's incomparably high stock to flow ratio that ensures it is and will always be the most stable store of value available. Gold has been accumulated for at least 6,000 years to achieve the stock to flow ratio that it has today. How could anything else ever match this, right? And he goes on later on to talk about how society or gold was able to develop this very high stock to flow ratio right in the beginning, but I won't go through that right now. If you want, you can read the book, or I'll also probably make another video another day about this. Now the part about platinum that a lot of people ask me a lot of times, why not platinum? And this is why. Even though it's a precious metals, platinum money, right? Because of its scarcity, it has been suggested that platinum could be a new monetary metal, but in the event that flow mining was to stop, then stocks of platinum would be exhausted in a matter of weeks. Well, in gold, it would take 64 years, right? In those circumstances, the value of platinum would skyrocket. That makes platinum far too volatile for use as money. It can never be a store of stable value because its stock is too small. Platinum is a precious metal. It can never be a monetary metal though. The idea that platinum could be a monetary metal is not new. Platinum coins were minted in Russia under Tsar Nicholas I. They contain 9 parts gold with 68 parts of pure Urals platinum, and were produced at the St. Petersburg Mint from 1828 to 1845. Apart from being a very difficult to mint coin because of the metal's hardness, they failed to circulate. They were never accepted as money because their value was not stable. The platinum for money proponents have labored under the common misconception that gold is money because it is scarce or rare. On the contrary, gold is money because there is so much of it relative to flow. So there you go. I hope that explained the stock to flow ratio and why gold has been money for millennia, and why it's so stable, right? And why other precious metals like platinum can never be money. If you enjoyed this video, make sure you hit the like button. Make sure you share this video far and wide. Subscribe to the channel if you haven't yet. And you can also follow me on Twitter, Steemit, and DTube. I wish you all a great day. Take care. Goodbye.